from a style point of view, I do try to stay pretty agnostic, but I would skew, I guess, more towards the value over growth. And that comes more from me being, I guess, downside focused rather than just purely upside focused. So I'm always initially focused on what's my potential downside in an investment, and then, you know, if the business sort of executes to the path you expect it to, the upside sort of works itself out. So I think that skews me more to value over growth. But that being said, if I'm comfortable with a growth company's sort of downside outlook, I'm more than willing to pay up to capture that growth as well. As far as an edge on the market, I mean, I play in the microcap space, which I think provides a natural edge in and of itself. Liquidity being the major factor for that. Just you are restricted. There's not as many funds playing in the space. It's mostly personal investors. Not as much sell-side research, not as much investment chatter on forums, Livewire, Twitter, places like that. And so you naturally have an inefficient market, I suppose, in microcaps, and it does provide that opportunity for investors if you're willing to put in the work. And then I suppose the other important thing is having conviction in that work, because there's often, you know, no sell-side research, or the companies themselves aren't very savvy with investor relations. So you've just got to have a lot of conviction in the work you've done, rather than having, you know, other people to sort of bounce that research off and sort of borrow their conviction, I suppose, in a sense. So that's sort of where my edge stems from. You know, and being in microcaps, it's very much an accumulated knowledge thing. I've been doing it now for the better part of 10 years, and so you get to learn the sorts of businesses that should do well, the sorts of businesses that maybe won't. You get to know the people involved, because they'll often pop up again and again on boards and management teams, and even from a sort of investor-based point of view. It is a very big universe, and so microcap funds, you'll often see very little overlap between funds, just given the opportunities you can have. So in my estimation of what I'm looking for, which is sort of small businesses under that 200 to 250 mil market cap, and I'm looking for sustainable business models, usually a bit of growth, good businesses in a nutshell. I estimate somewhere like 500 to 600 businesses in that universe. So like you said, it's multiples bigger than the ASX 200, where some larger funds play. So you have to be a bit judicious about how you approach a universe like that. I do use screening tools as an initial search, but they're a very blunt tool. You have to be careful with them, because it will screen out ideas, and these are businesses with sometimes very fluctuating financials, and also a lot of reverse takeovers and things like that. So oftentimes the data itself won't be fantastic that flows through a screen. So the short answer to your question is, I do a lot of reading. You know, ASX announcements every day, quarterly reporting season, opening up every 4C report. It's just the hard work that you have to put in to sort of, like I said, build up that knowledge base, so that when the opportunity and the time's right, you can be quick to move on it. You know, most of my ideas are very rarely stumbling across a new company I've never looked at and spending a few weeks to get the conviction to buy it. It's usually a company I've looked at 2 or 3 years ago, and then, you know, these businesses are often very early in their business cycles or their business lives, and you're just waiting for that timing to be right. Yeah, I mean, it's a really good question, and as an investor, you do have to have sort of a checklist or something like that, where you are looking for those red flags. And the most obvious one is the past performance. So if you go back and look at, well, what has the business said in the past that they would do? Did they achieve that? You know, if they did, were they conservative in how they provided either guidance or sort of communication to the market? Did they miss? If they sort of missed what they said they would do, were there sort of valid reasons for it, and can you sort of still justify that as an investor? Beyond that, like I said before, as a microcap investor, or even just an investor in general, you do get a nice accumulated knowledge base of business models and people, and just in general things that are red flags to you. So, you know, you might see a person pop up who you know has a questionable track record in the past, or a business model you know that another business has tried before and failed. That's where, as an investor, that accumulated knowledge base really kicks in, and you can sort of screen out those ideas. But like I said, the simplest one is just to go back and see, has the business sort of achieved what they said they would do? Because a lot of businesses, you know, provide some really good positivity, I guess, around their business and where they think they can go, and that's only natural. Like, you know, have a management team that are obviously incentivized to sort of drive that business. But as the investor, you have to be the pessimist, I suppose, to their unbridled optimism sometimes.